time is money and money matters. I want to talk a little bit about the bill that is going to pass in Congress, the economic stimulus plan. And there are several organizations that are helping to disperse and watch this money. One of the organizations is called the National Community Reinvestment Coalition, NCRC. And the members are community organizations nationwide working to promote fair and equal access to credit, capital, and banking services for all communities and populations. NCRC supports and empowers its members to be effective leaders and representatives in their own community and engages them in support of national legislation initiatives. So they are supporting this bill. Representatives is now in the Senate, still undergoing changes, additions, deletions. It deleted several billion funds from the plan, the original plan that, remember, Paulsons introduced this. No apology, Paulsons. Anyway, since its founding in 1990, the NCRC, a membership composed of over 600 organizations nationwide. I could not find a list of the members of this community on their website, so I like to see that. Who are these people and organizations that are supporting this? Let's have transparency and everything so people can find out what is going on. Organization represents community development corporations, civil rights groups, local and state government agencies, and religious institutions. They range from large national nonprofit organizations, but most are local nonprofit groups based in communities of color and lower income neighborhoods. I'd like to see proof of that. I really would. I mean, I just want to make sure that our best interests, all of us, are being small business micro lending. That means an itsy bitsy bit of lending. Housing development, community organizing, rural land loss, and more. I did not see any of these rallies that were held, group of town meetings and rallies that were held, and none of them were held in California. At least they don't list those on their website. Speaking of California, everyone in California should be aware, if you don't already know, it's not a joke, people, that you will receive an IOU for your state income tax. That is absolutely outrageous. I have a question. Can we, the taxpayers, charge the state interest and penalties on the money that they will withhold from us? No, that is a whole different story. I think it's fair that we charge the states the same rates that they charge citizens who owe taxes. I think that the fact that the state of California plans to issue IOUs to its citizens is absolutely one good thing that the NCRC is doing. It has filed a civil rights complaint against Standard & Poor's, the rating system, civil penalties and equitable relief sought for consumers and communities injured by rating agencies' role in the foreclosure crisis. Well, there's something. We'll have to dig into the background of Standard & Poor's. There is no legitimate business or personal justification for discriminatory conduct. It is against the law. NCRC uses TARP funds immediately to address foreclosure. The plan, guys, okay? TARP stands for the Troubled Asset Relief Program. It is a program of the United States government to purchase assets and equity from financial institutions, banks, in order to strengthen the financial sector. It is the largest component of the government measures in 2008 to address the subprime mortgage Paulsons Rescue Plan. It is a 110-page financial bailout bill and is available on the internet. In testimony before the United States House of Representatives Committee on Financial Services, the National Community Reinvestment Coalition proposed that the remaining Troubled Assets Relief Program TARP funds be used to establish a national loan modification program to purchase 3 to 5 million home loans using the power of eminent domain. Do you understand what that means, people? Let me read that again. In testimony before the United States House of Representatives Committee on Financial Services, the National Community Reinvestment Coalition, NCRC, is what I'm talking about. This is part of the bailout plan, proposed that the remaining Troubled Assets Relief Program, TARP funds, be used to establish a national loan modification program to purchase 3 to 5 million home loans using the power of eminent domain. Arresting the foreclosure crisis, which is the root cause of the current financial crisis, and its contagion effects will begin the process of repairing the economy and stabilizing the turbulent financial market. Today, TARP has been used in an ineffective and misguided way. It failed to address home foreclosures, and the program missed its mark, and that was what it was supposed to be for. I understand you have to go through the banks and the loans that the banks made that were toxic loans to get through this, but it's not working. While helpful, federal programs and voluntary efforts to stem the foreclosure crisis have not been sufficient. Now, facing a secondary wave of foreclosures caused by option ARM loans and rising unemployment, a new strategy is desperately needed to stop the foreclosure crisis and repair the economy. Under the proposed Homeowners Emergency Loan Program, HELP, Treasury Department would be directed to purchase loans at a steep discount, 30 to 35% of the current market value. Faced with the intense security of taxpayers and Capitol Hill about its spending habits in recent weeks, the New York-based bank issued its first quarterly report on spending of the funds from the government's TARP program. We're talking about Citigroup here. Citigroup is a Fortune 500 company, said that it has approved $36.5 billion in loans and other commitments backed by TARP during the fourth quarter of 2008, which included making $1 billion in student loans and $2.5 billion in businesses and personal loans. Said it expanded credit lines and opened new accounts for credit card. I'll have to check those statistics. But the bulk of the spending was earmarked for the housing market. Citigroup said it spent $27.5 billion to that end during the last 3 months of 2008, $5 billion to that end during the last 3 months of 2008, much of which to purchasing mortgages in the secondary market, including $10 billion in mortgage-backed securities guaranteed by Fannie Mae and Freddie Mac. $2 billion was earmarked for making mortgage loans for families and individuals with good credit histories. They're not having a problem. They have good credit. They have money. Citi is working in partnership with the government to increase available lending and liquidity in the U.S. financial markets and to help put the U.S. economy back on track. Willingness to lend money has become a focal point in the ongoing crisis after the U.S. government provided nearly $200 billion in government funds to financial institutions in an effort to get credit flowing again. A survey of top loan officers across the country published a few weeks ago by the Federal Reserve revealed that credit remains tight at the nation's bank despite government aid. We're surprised. That was supposed to work, right? Lawmakers and taxpayers have accused banks of using much of the TARP money to fund acquisitions, pay lavish bonuses, and other seemingly frivolous expenses. Citicorp offered its first glimpse recently into how it's spending the funds by Fannie Mae and Freddie Mac. About $8.2 billion was earmarked for making mortgages loans to families and individuals with good credit histories. The bank is also now considering nixing its corporate sponsorship deal with the New York Mets that involves the naming rights for the team's new stadium, according to a report in the Wall Street Journal. Citigroup told CNN in a statement that it has a legal binding agreement with the Mets and it is not using TARP capital for Citi Field or the market, hoping to deflect some of the criticism of their spending. Banks are trying to offer a bit more transparency in what they are doing with their TARP funds. Citibank is currently advertising checking rewards on local radio stations very heavily. It may be worth looking into. Rival Bank of America, which has received $45 billion in government aid, said last week it would file quarterly reports on its lending status. Aren't you supposed to do that anyway? And Westco banking giant Wells Fargo recently that it paid a $371.5 million quarterly dividend to the U.S. Treasury in exchange for the $25 billion that the Treasury Department invested in the bank. J.P. Morgan Chase, soon to be known as Chase Bank, sent out a letter stating that they would honor all WAMU accounts. A couple of weeks later, I heard from someone that their account and credit card was closed. When he called the bank, he was told to pay on the card and that a balance amount of his secured credit card will be refunded to him in the next few weeks. I'm sorry, I have a problem with paying on a card that I cannot get. If the turnaround is going to be that fast, I should not get a negatory mark on my credit report. Anyway, 3 weeks later, I received the balance of my account. Now, the letter said that they were going to honor the accounts. They never said anything saying that they were closing the accounts. Then they just sent me a check saying this is the balance of the funds for this account. No explanation. I guess it was supposed to be a word of mouth kind of thing. Anyway, this is indicative of what these banks are going to do that merge and want to clear the liabilities from their books. I don't see how those type of accounts would hurt the bottom line, but I will consult one of the experts that I know. In the final analysis, I would like to say, if you keep doing the same thing, you are bound to get the same results. If you want something different to happen, then you need to do something different. And this is my report for Money Matters, because time is money, and money most definitely matters. Thank you for watching.